Hello, everyone. This is Gary Carpenter with Prepare for College. And again, that's prepare the number 4 college.com. Today, we're going to pick up our session here on assets. Last week, we talked about assets on the FAFSA form. This week, we're going to draw our attention to assets on the CSS profile. And again, joining us today is Chuck Moore. And Al Hoffman and I'm sure, are going to have some questions. So what we're going to do is we're going to pass it over to Chuck right now. Take it away, Chuck.
All right. Thank you, Gary. Yeah, last week we talked about sheltering assets on the FAFSA form. And what we want to cover now is how to handle your assets whenever you're completing the pre-app or the CSS profile. And the rules and regulations are totally and completely different. And some of the things here that I'm going to go over, I'm sure Al and Gary will give us some input on it. Now, on the FAFSA form, like we covered last week, the primary home, the equity in the primary home is never reported on the pre-application for federal student aid. However, you must report the net equity of your home or residence on the CSS profile. And some colleges basically will cap these to 2 to 4 times your income. So you've got to know how to put your assets down on the CSS profile. And normally what I recommend people to do is to look at the value of your home. And then I would put a quick sale value on the home. In other words, what could you sell your home within the next 30 days? And of course, that's not going to be the full sales price that you could possibly get out of the home. I would go ahead and put the quick sale value to give you a rough example. If your home was actually on the market for $100,000, and once again, these are just figures here I'm throwing out, then I would assess the house down by at least 30,000. So therefore, I would put $70,000 down as the equity into your home. On the retirement accounts and annuities that a lot of people have, the FAFSA will qualify for 401ks, IRAs, and pensions and annuities. They're not counted on the FAFSA. But but on the CSS profile, some schools do ask for retirement balances that you may have, as well as some of the annuities that you may have. Some of them will even ask if you have any equity into a life insurance policy, which is not counted on the FAFSA, but is on the CSS profile. And the 529 plans, they're capped out on the FAFSA form at 5.64%. And the grandparents on 529 plans are no longer counted. We went over that last week. However, on the CSS profile, 529 plans in the grandparents, parents, and custodial accounts, they are counted on those. So what can you do with 529 plans to get more money out of that? You can use the 529 plans to cover any qualified educational expenses, and that includes private high school up to a certain limit. You can use them to buy school supplies, computers, things along those lines to get those monies down. These are costs that you're going to incur anyway. Now, when you're looking at trusts and business ownerships, the FAFSA form requires only the adjusted net worth. But the CSS profile is often going to want the full appraisal value of any type of trust, business, or farm equity. So you need to be aware of that as well. Now, more detailed questions on the CSS profile, you may have different, questions that is not coming up on the FAFSA form, such as non-custodial parents' income. You may have medical expenses, elementary and secondary school tuition for the student's siblings, and other special circumstances that are not asked on the FAFSA form. So these are some of the things that you have. If you have assets that you have and it's not geared towards paying for the cost of a college education, like you have an emergency reserve or an UGMA or UTMA account, I would utilize those dollars and drain those dollars down to pay some of the expenses that you're going to incur anyway, instead of taking it out of your checking account or whatever to pay for these expenses, like if the kid needs a new car, computer, school supplies, things along those lines. I would reduce and get those assets down as much as you possibly can. So those are some of the things, Al, that I wanted to cover, and maybe you have a few other things.
Just a couple of backdrop things. So whoever's listening to us, you're sitting there saying, well, so I got two forms to fill out. Well, maybe not. Out of the 2,400 popular named institutions that use the FAFSA, only 10% of them, 242, currently use the CSS profile. So the profile is a different document, as as Chuck was just sharing with you. It's different in its scope, and it's different in the questions that it asks, and even how they ask them. And the non-custodial parent, for instance, is not even touched by the FAFSA. So this is a form that colleges that have endowments and a little bit of money, this is a form that they use to determine how much of their endowments you're going to get in your aid package towards attending that college. Whereas the FAFSA is the backbone for distributing federal and in many cases state aid. And then the colleges that don't use the profile will use the FAFSA for both. So setting that stage, you can see that the profile is going to dig deeper than the FAFSA because, quite frankly, they don't agree with the FAFSA calculation. They think it has holes, and they fill those holes with those questions that Chuck was just going over. So that's one thing. Secondly, you don't double calculate your assets. You put in whatever you want for your home, for instance. And Chuck gave you a good example. You put in the market value, you put in the debt, and then they calculate the rest. You don't have to calculate it for them and say, I'm going to put down $70,000 with equity. You put down that your property is, well, we need to do a different set of numbers here, Chuck. So let's say that you think the value of the home is 100,000, but you're going to do a 30-day quick sale. So then the market value is 70,000. And if you have 20,000 in debt, then you have a $50,000 figure that the CSS profile is then going to calculate the effect on your EFC. And by the way, the profile still uses the term EFC, expected family contribution, as opposed to the Department of Education's FAFSA, which uses the acronym Student Aid Index, SAI. So that's the first thing. The second thing is the property thing I wanted to cover. And the third thing is unfortunately, and this is really, I will hold back so I don't get in trouble here. But the profile went behind the curtain on their calculations. So what we're telling you today is what they last were available to be seen. So many years ago, they took it off of the internet. There was nowhere anywhere you could find the calculation figures. For instance, the assets in the FAFSA is 5.645%. At that time, before they took it behind the curtain, and the day in that sentence, the college board that administers the CSS profile, before that time, then it was 6%. Well, is it still 6%? We don't know. We really don't. But we're going to then tell you that that's what it was, and that's what you can expect it to be. I don't believe they'll be that drastic in difference between what they were and it is now. But we don't know. Maybe they're at 6.1. Maybe they're at 5.9. We don't know. But it was 6%. And that's the number you can use to as a thumbnail to say, this is what I think it is. You say, well, wait a minute. Is there any way to find out? Yeah, there is, but I don't trust it very much. But there's what they call on everybody's website a net price calculator. And that's where you answer some questions, the very questions we're talking about here. What is your income? What are your assets? And then it gives you this is what, and your grade point average, your standardized test scores, and this is what you can expect from the college. So if you reverse engineer that number, you could sit there and say, college is 90,000. I'm net price calculator says I have to come up with 30,000. Then you could say, well, your EFC was 30,000. This is really getting deep into the woods here, Gary. I don't know. Maybe you could help me out with this. Maybe I went too deep. But it is a figure that's behind the curtain. So it's a little bit tough to deal with from the standpoint of helping families out with it, except to say this is the way it used to be. Gary, fire away.
You're absolutely right, Al. I mean, ever since they went supposedly behind the curtain, and we don't know how they calculate the expected family contribution on the CSS profile, it's been a mystery. And it's one that we just have to work with. I think one of the things that Chuck brought up that I just like to drop in is, when you have assets and you're going to spend them down, if you're buying certain items for college and they come out of your own personal funds, that's fine. But once you get into a 529 plan, you have to be careful that the things you use the 529 plan to pay for college are qualified expenses. And one that jumps out all the time is transportation to and from school is not a qualified expenses in a 529 plan, but under the Department of Education, it is a qualified expense as far as the cost of college. So again, it gets complicated and it gets more and more complicated as new things creep into it. Al's talking about the profile and the calculation. Chuck's gone through both the assets for the FAFSA form and for the profile. There's a tax situation here too. It's just, it gets complicated. So that's all I can add.
Well, at the last week, I mentioned that this is, and we don't do this very often. As a matter of fact, this may be the first and possibly the last time that we've openly said, our talks give you a lot of DIY issues where you can become educated about how the system works, and with that knowledge, make good decisions. However, when it comes to assets on the FAFSA and the profile, this is one time I'm going to sit there and say, seek some help. Seek some people that do this for a living, and they're going to be a lot better off at helping you strategize what to do and when to do it. It is a little bit more difficult than a DIY situation. Gary, would you agree with that as well? That's my
Absolutely.
opinion.
I mean, if you've got a simple tax return, you can probably do it yourself. But once it starts to get complicated, you need professional help. College financial aid forms are the same way. If you have a simple situation, you can probably get through it yourself. But once it gets complicated, you need help because there's a whole set of rules you don't even know about.
And it can
Well,
hurt you.
that's one of the things that I really appreciate of what Gary came in and added here. Not only are you dealing with the institutional methodology formula, which is used to calculate your CSS profile EFC, you're also dealing with tax issues. And these tax issues is that if you liquidate a particular product or you sell something or you utilize it for something else, you've got to take in consideration is that if you do this could potentially qualify you from additional money coming from these universities that Al had mentioned. However, is it going to be more than what the tax consequence is going to be on liquidating those assets?
I agree. It's something you have to take a look at, and therein lies where a professional can tell you this is a good move and this is going to be a break-even move and this is a bad move.
So not only will you use a qualified college consultant, you also need, if you got substantial amount of assets that you're going to be liquidating and such, you need a very good competent CPA.
Amen.
Well, Chuck, thank you very much. This has been very informative, and I hope Al and I have brought a little bit to the table also. But for those out there listening, again, we'll be coming back again next week with another podcast. This will be recorded as the others are on our website at Prepare for College, and that's prepare the number 4college.com. And as I always say at the end of every podcast, don't keep us a secret. If there's someone else out there that could use our help or just get the general information, give them the website, and I'm sure they'll find a wealth of information that they can use. For now, I'm going to say goodbye. Everyone, have a good week now. Goodbye.